Joining me now is the Forbes Media Chairman Steve Forbes and former CKE Restaurant CEO Andy Puzder. Great to see you, gentlemen. Thank you so much for being here. Let me kick it off with you, Steve Forbes. Wages seem to be the headline in this report. They were up 0.3% in January and up 0.2% in February. I'd call that a flat showing. What say you?
It is a flat showing, and it's been observed a lot of the jobs are being created in industries traditionally with lower pay. And it's just very strange, Maria, that a lot of economists are saying, gee, that's a good thing because maybe the Fed won't be quite as aggressive in raising interest rates, that wages aren't going up as much. We have this perverse environment where the worse the economy does, the market has a chance to get better because the Fed won't bash it so much. And so it's absolutely perverse. But anyway, wages are not going up the way they had, and it doesn't look like they will.
And yet, look, the jobs numbers, Andy, 311,000 jobs in February, and we were expecting a big revision in January. And actually, January jobs were up 504,000, down from the 517,000 number we saw last month, but still an incredible number in January.
Yeah, the numbers have been great on job creation. I think the reason is that as the government benefits from the pandemic are beginning to dry up, with savings rates now below historic and pre-pandemic lows, and credit card debt above historic highs and pre-pandemic highs, we're finding that people need to get back to work. And it's one of the reasons I think people are entering into these retail jobs is because those are where the job openings are right now. And as people need cash, they're getting back into work. You know, labor participation rate was up. Wages were not up as much because the demand for workers lessens as more workers enter the labor force. So the numbers do tell a story, and they tell a story of people needing to get back to work.
You're right. It's leisure and hospitality and retail. Andy, I guess those are lower paying jobs.
Well, they are lower paying jobs. They're entry-level jobs. They're meant to give people the experience they need to get into the labor force and to move up the ladder of opportunity. You can't just jump into a job as a vice president. But with people, particularly young people, having sat out outside the labor market for the years of the pandemic, and then since with the government benefits that people have been able to receive, I think they're finding out that they need to get back in and they need to get the experience that's required to move ahead in life. And so this is a good sign. This isn't a bad sign.
Well, look, we're also talking about the president's budget, Steve, and Biden setting up a fight with Republicans with this new budget. His wish list, taxes on the wealthy, businesses, investors, coupled with a lot more spending. He claims it's going to cut the deficit by $3 trillion over the next decade. But the Committee for a Responsible Budget is calling Biden's spending programs excessive, growing the debt to a record share of the economy in only 4 years. The Chamber of Commerce says that this is a recipe for economic and fiscal disaster. Steve, let me just tell you that this budget would borrow $19 trillion through 2033. He wants trillions in new taxes, and he wants to take capital gains taxes as high as 45%. Your thoughts?
Well, don't have to think much about that. This is a formula for disaster. And he's very lucky that the Republicans are going to block it in the House of Representatives because you have a depressed economy going into an election, as Jimmy Carter can testify, not a formula for re-election. So this is a big budget, bloated budget, bad budget, and the Republicans will save him from it. But I just point out what the real issues are going to be. One of the big issues in 2024 is what kind of economy do we want? Do we want a European sluggish kind of an economy where you get 1, maybe 2% growth in good times and sluggishness after that? Or do we want the kind of traditional vibrant economy where we have 3.5%, 4% growth, which is what we're quite capable of if we do what we did under Ronald Reagan, cutting taxes, cutting deregulation, curbing at least a little bit on the spending side, having a somewhat stable dollar. Voila, it always works. But they always ignore history because they want control more than prosperity.
Well, look at these tax increases. You're talking about corporate taxes going higher. You've got capital gains taxes going higher. He says he's not going to raise taxes on anybody making $400,000 or more, but your 401k is going to get hit.
Well, and also inflation is a tax. You know, if you have a 10% sales tax, you spend $100 on something, you pay 110. Inflation is a tax, but it's not overt. You're still paying going from $100 for what you paid before to 110 with this kind of inflation. So it's a hidden tax, which hits everyone, and we know it hits disproportionately lower income people. So that's a bald face, I'll be blunt. That's a lie when he says under 400,000 not getting hit by taxes. It's called inflation.
Yeah, well, spending in the next year would stretch to $6.9 trillion. That's $2.5 trillion above pre-pandemic levels, 55% higher, Andy. It doesn't look like this is going to go anywhere because I spoke with Speaker Kevin McCarthy, who says it's dead on arrival. Your thoughts?
No, it's not a governing document. It's a political document. It's a setup for the 2024 election. And it's in his best interest that none of this gets implemented, because if it did get implemented, as Steve said, it would destroy the economy, and it would certainly bring the Republicans back into power. This is a document that makes absolutely no sense. I'll say the only thing I would say positive is if he got these taxes through, then Jerome Powell could stop raising interest rates, because the taxes would destroy the economy and not only bring down inflation, reduce demand and bring inflation down, but bring the entire economy down.
But we'll keep a spotlight on it. Steve Forbes, Andy Puzder, great to see you both.
Thank you.
Thank you, gentlemen.